Welcome back. Ever wondered how to actually grow your money? Today we're breaking down 5 proven strategies to help you build real wealth. Forget get-rich-quick schemes. This is about creating a solid, sustainable financial future. If you're a young professional ready to take control of your finances, this guide is for you. We'll cover everything from budgeting basics to the power of long-term investing, all in clear, actionable steps. By the end, you'll feel confident and ready to start building your wealth. Let's dive in. The foundation of financial success? It's not about luck or some secret formula. It's about understanding where your money goes and making conscious choices about how you spend it. It's about taking control of your financial destiny, one step at a time. A budget. It might sound boring, but it's the cornerstone of building wealth and achieving your financial dreams. Think of budgeting not as a restriction, but as a tool for freedom. It's not about depriving yourself. It's about empowering yourself to make informed decisions. It's about aligning your spending with your values and creating a life you truly love. It tells your money where to go. It gives every dollar a purpose, ensuring that your hard-earned cash is working for you, not against you. It's about being intentional with your finances and directing them towards what truly matters. Start by tracking every dollar for a month. This is the crucial first step. You need to know where your money is currently going before you can make any meaningful changes. Don't worry about judging yourself. Just observe. Use a spreadsheet if you're comfortable with numbers and formulas. It's a great way to visualize your spending and calculate totals. Notebook if you prefer a more tactile and personal approach. There's something satisfying about physically writing down your expenses. Or budgeting app. These apps can automate the tracking process, making it even easier to stay on top of your finances. They often link directly to your bank accounts and credit cards, providing a real-time view of your spending. You'll quickly spot surprising spending patterns. We all have them, those little expenses that add up over time without us even realizing it. Maybe it's takeout or forgotten subscriptions. These seemingly small expenses can significantly impact your budget. Awareness is key. Once you're aware of your spending habits, you can start making conscious choices about where to cut back and where to allocate your resources more effectively. Now build your budget using the 50-30-20 rule. This is a simple and effective framework for allocating your income. 50% to needs like housing, food, transportation, and utilities. These are the essentials you need to survive and function. 30% to wants like dining out, entertainment, hobbies, and shopping. These are the things that make life more enjoyable but aren't strictly necessary. 20% to savings and investments. This is crucial for building your future financial security. It includes emergency funds, retirement savings, and other investments. Adjust these percentages to fit your goals. The 50-30-20 rule is a guideline, not a rigid law. You may need to adjust the percentages based on your individual circumstances and priorities, especially if you have debt. If you're carrying a lot of debt, you may need to allocate a larger percentage of your income to debt repayment. Automate your savings. This is one of the most effective ways to ensure that you're consistently saving money, so you pay yourself first. Treat your savings as a non-negotiable expense, just like rent or utilities. Use apps like Mint. These apps can help you track your spending, create budgets, and set financial goals. Or YNAB, you need a budget. YNAB takes a slightly different approach, focusing on giving every dollar a job to make tracking effortless. Find an app that works for you and stick with it. The key is consistency. Review your budget monthly. This is essential for staying on track and making adjustments as needed, and adapt as your life changes. Your budget is not set in stone. As your income, expenses, and goals change, your budget should evolve as well. Remember, budgeting is about aligning your spending. It's about making conscious choices about where your money goes and ensuring that it's supporting your values and priorities with your values and goals. What's important to you? Is it travel, education, early retirement, or something else? Your budget should reflect those priorities. It reduces stress and gives you control. When you have a budget, you know where your money is going and you're less likely to overspend or make impulsive purchases. Make it a habit and you'll set the stage for real financial growth. Budgeting is not a one-time fix. It's a long-term habit that will pay off in the long run. Start today. Don't wait until you're in a financial crisis to start budgeting. The sooner you start, the better. Your future self will thank you. Taking control of your finances is one of the best investments you can make in your future. You'll be grateful you started today. Next up, your emergency fund, your personal financial safety net. Life throws curveballs, job loss, medical bills, car repairs. Without a buffer, you risk falling into debt. Aim to save 3-6 months of essential expenses. Think rent, food, utilities. If that feels overwhelming, start with $1,000 as a mini goal. Keep this money in a high-yield savings account separate from your main bank to avoid temptation. Only use it for true emergencies, not vacations or shopping sprees. If you dip into it, make replenishing your top priority. This fund gives you peace of mind and protects your long-term goals. Don't skip this step. It's the foundation for everything else. Once it's set, you can focus on growing your wealth. Security first, then growth. Build your buffer now. With your emergency fund in place, providing that crucial safety net for unexpected expenses, it's time to shift gears. We've established a foundation of financial security, and now we're ready to take the next step, making your money work for you. Think of your emergency fund as your financial shield, protecting you from life's curveballs. Now we're going to build wealth, and that requires a different strategy. It's time to make your money work for you through investing. Investing isn't just for the wealthy elite, it's a powerful tool available to everyone, regardless of their income level. It's about putting your money to work, allowing it to grow over time, and ultimately achieving your financial goals. Whether you dream of early retirement, buying a home, or simply securing your financial future, investing can help you get there. For most, index funds and ETFs or exchange-traded funds are the simplest, most accessible, and often the smartest way to begin your investment journey. These investment vehicles offer a diversified approach to the market, minimizing risk and maximizing potential returns, especially for those just starting out. They are designed to track the performance of a specific market index, providing broad exposure to a wide range of companies. Are the simplest, safest way to start. Investing can seem daunting, especially with all the complex terminology and strategies out there. But index funds and ETFs offer a streamlined approach, making it easy for beginners to get involved without feeling overwhelmed. They provide a level of diversification and risk management that's hard to achieve with individual stocks, making them a great choice for those who are new to the world of investing. These funds track the market, mirroring the performance of a specific index like the S&P 500 or the total stock market. This means that when the overall market goes up, your investment goes up, and vice versa. It's a passive investment strategy that requires minimal effort and expertise, making it ideal for busy individuals who don't have the time or inclination to actively manage their investments, giving you instant diversification, so you're not betting on a single company. Diversification is a cornerstone of sound investing, and index funds and ETFs provide it automatically. By investing in a fund that tracks a broad market index, you're essentially investing in hundreds or even thousands of different companies across various sectors. This reduces your risk, as the performance of any single company won't have a significant impact on your overall portfolio. They're low cost, easy to buy, making them accessible to investors of all levels. The expense ratios or fees associated with index funds and ETFs are typically very low, often less than 0.1% per year. This means that you keep more of your investment returns, allowing your money to grow faster over time. And with the rise of online brokerages, buying and selling these funds is easier than ever, often requiring just a few clicks on your computer or smartphone, and historically deliver strong long-term returns. While past performance is never a guarantee of future results, the historical data shows that index funds and ETFs have consistently delivered solid returns over the long term. This is due to the power of compounding, where your investment returns generate further returns, creating a snowball effect that can significantly boost your wealth over time. Open a brokerage account, the gateway to the world of investing. A brokerage account is simply an account that allows you to buy and sell investments like stocks, bonds, and funds with a reputable provider like Vanguard or Fidelity. These companies are known for their low fees, wide range of investment options, and excellent customer service. They offer a variety of resources and tools to help you make informed investment decisions, and their user-friendly platforms make it easy to manage your account. Start with a total stock market or S&P 500 index fund. These are excellent choices for beginners because they provide broad exposure to the U.S. stock market. A total stock market fund invests in virtually every publicly traded company in the United States, while an S&P 500 fund invests in the 500 largest companies. Broad exposure, minimal fees. These funds offer instant diversification and are incredibly cost-effective, allowing you to maximize your returns over the long term. Automate your investments and use dollar-cost averaging. This involves setting up a recurring investment schedule where you automatically invest a fixed amount of money at regular intervals, regardless of the market conditions. Invest a set amount regularly, no matter what the market's doing. This strategy helps to smooth out the volatility of the market, as you'll be buying more shares when prices are low and fewer shares when prices are high. Don't try to time the market. It's a fool's errand. Trying to predict when the market will go up or down is nearly impossible, even for professional investors. Just stay consistent. The key to successful investing is to stay the course, even when the market is volatile. Ignore short-term volatility. Market fluctuations are a normal part of the investment process. Don't let fear or greed drive your decisions. Focus on the long game. Investing is a marathon, not a sprint. The longer you stay invested, the more time your money has to grow. Even small, regular investments can grow significantly over time. The power of compounding is truly remarkable. Even if you can only afford to invest a small amount each month, it can add up to a substantial sum over the years. Legendary investors recommend this approach for a reason. Warren Buffett, one of the most successful investors of all time, has repeatedly advocated for investing in low-cost index funds. Set it, automate it, and let your money grow. Once you've set up your investment account and automated your contributions, you can essentially sit back and watch your money grow over time. This is how you build wealth, slowly but surely, by consistently investing in the market over the long term. Slowly, steadily, and with confidence. Investing doesn't have to be stressful or complicated. By following a simple, disciplined approach, you can build wealth and achieve your financial goals with confidence. Start investing now. The sooner you start, the more time your money has to grow. Don't wait for the perfect moment, because it will never come. Take action today and begin your journey to financial freedom. Saving is great, but there's a limit to how much you can cut, so focus on earning more. Start a side hustle, freelance, deliver, food tutor, or sell your skills online. Use what you already know or enjoy to generate extra cash. Upskill for your main career, learn in-demand skills, get certifications, and don't be afraid to ask for a raise. Online courses make it easier than ever to boost your value. Sometimes switching jobs brings the biggest pay jump. Don't stay where you're undervalued. Combine side hustles and upskilling for maximum impact. More income means more to save and invest, accelerating your path to financial freedom. Take control of your earning power. The best investment is in yourself. The real magic of wealth building, it's not about getting rich quick or finding some secret formula. It's about understanding a fundamental principle that has been working for investors for centuries. It's about harnessing the power of time and letting your money grow exponentially. Compound interest, it's the cornerstone of long-term financial success. It's interest on your interest, the snowball effect in action. Each period you earn not only on your initial investment, but also on the accumulated interest from previous periods. This creates a powerful cycle of growth. Small, consistent investments snowball over time, gathering momentum and growing far beyond what you initially invested. Think of it as planting a seed that grows into a mighty oak. The earlier you start, the more time your money has to compound, the more powerful compounding becomes. Even a few extra years can make a significant difference in your final wealth. This is because the longer your money compounds, the faster it grows. Even $50 or $100 a month consistently invested can grow into a huge nest egg, thanks to the magic of compounding. It's about building a solid foundation for your future, brick by brick, if you start young. Don't underestimate the power of starting early, even with small amounts. Automate your investments to make it effortless, so you never miss a contribution. Set it and forget it, and watch your wealth grow steadily over time. Don't let emotions dictate your investing. Stay rational and focused on your long-term goals. Stick to your plan, rain or shine. Market fluctuations are normal, but panicking and selling during downturns can derail your progress. Think of your investments like planting a tree. It requires patience and nurturing. Slow at first, but massive growth over decades. The longer you let it grow, the stronger and more valuable it becomes. Ignore daily market noise, it's often just short-term fluctuations. Focus on the long-term trend. Zoom out and see the bigger picture. History shows the market rewards patience and consistency. Those who stay invested through thick and thin are the ones who reap the greatest rewards. Combine time, the most valuable asset you have, consistency, making regular contributions no matter what, and compounding, the engine that drives long-term wealth creation. And you're on the path to financial freedom. You'll be able to live life on your own terms without having to worry about money. Let your money work for you, generating passive income and growing your wealth while you sleep, not the other way around. Don't spend your life chasing money, let money chase you. Start compounding today. The sooner you begin, the brighter your financial future will be. There you have it. 5 actionable ways to grow your money. Don't try to do everything at once. Pick one step and start today. Building wealth is a marathon of smart, consistent choices. Every dollar you save and invest moves you closer to financial freedom. You have the tools. Now take that first step. Your journey to financial growth starts now.